Welcome to Insights into Insurance with Tom Sorensen of Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
It's another Saturday morning. That means it's time for Insights into Insurance. Tom Sorensen from Americana Insurance, and it's a busy Saturday morning, Tom, around here at Kate Radio.
Yeah, it is busy. You got a lot of sports going on, Mike, and just so I can say good luck, and well, first of all, congratulations to the Albert Lea wrestling team, and then good luck to the individuals that are going for state, and then the team made it to state, and then the hockey team. Wow. We got a lot of good things going on here, so good luck to the Albert Lea hockey team.
All right, let's jump right into our email from a listener. Hello, Insights into Insurance. I just bought a house for $151,000, but I had to insure it for $250,000. My agent didn't really explain why he just said what he did. He just said you had to do it. Can you please explain a little bit more? From Anthony.
Yeah, Anthony, first of all, I want to say if you ever ask us that question at American Insurance, we're going to give you an answer, okay, not just because you have to, and maybe your agent did give you a little bit more explanation. I don't know. I wasn't there part of it, but so I will tell you but there's some things that we need to talk about before we get to the final answer, okay? So stay tuned, Anthony. First of all, I'm going to try to explain why there is different types of values. So in the insurance industry, I can think of different values that we talk about or use. There is what we call the market value. There is what we call book value, actual cash value, replacement value, and reconstruction value, Mike.
Is this kind of like automobile insurance as well?
It could, and I'll try to maybe throw that in a little bit as we talk here. So yes,
let's talk about market value and how that actually works.
Yeah, basically the definition of market value is the price for which something would sell for right now, based on what is considered the current market conditions. Okay, so market value of an article or a piece of property is the price which it might be expected to bring for sale in a fair market. Now, in a fair market is basically what it is in a market that is usual. Okay, now what a fair market would not be, or market value would not be, is something that is obtained on a public auction or a forced sale. Something, so market value or a fair market would be something that is where you have the time to prepare to sell something and adequate resources to do that. Okay, so example, like on a house, if you had a forced sale, that forced sale probably won't get as much money as something that is on the market,
on the retail market.
Right, exactly.
So if we go back to Anthony's email,
right,
his example was the home market value is currently $151,000. There are some different stipulations as far as maybe what houses are selling in that area, in that block, in a couple of blocks.
Right.
And Americana Insurance is not going to go out and do a market value of your home. It's done by someone else, and those numbers you can get.
I'll be honest with you. We don't really care what market value is on the insurance portion. So just so Anthony knows, basically what he did was he set the market value at $151,000. That's basically the market value of his house because he was willing to pay $151,000 for the house.
Okay, then let's talk about book value.
Yeah, book value. Yeah, book value isn't something that we use a lot of, but I know where some people are going to go with this, but I'll talk about it. Book value refers to a value of assets as shown in the official accounting records of a company. Okay, it can be determined based upon actual cost of stock, of merchandise, and accounts on hand less depreciation is basically a book value of a company. Okay, another book value I can think of is like on vehicles. Okay, or
the blue book.
The blue book, yes.
Everybody
okay.
knows about the blue book.
Right, and that's where I thought everybody was going to go. So there are book values at vehicles or other types of items with wheels, basically, that I can think of as an actual book value. Okay, so that can be used to determine some values, and we'll get into that a little bit here on the next value.
And that's the actual cash value
Right.
of the property.
Now we're talking more of an insurance coverage type of value. Actual cash value is an amount equivalent to the replacement cost of lost or damaged property at the time of loss. So it's replacement cost minus then less depreciation. Okay. So in regards to buildings, there is a tendency for the actual cash value to closely parallel the market value of a property. Okay, that would be considered more of an actual cash value instead of, I'll say, replacement cost value. Okay, and there's many factors of actual cash value. It can be, first of all, it's replacement cost minus depreciation. It could be market value, rental value. What is the use of the building, the area in which it is located, obsolescence, and assessed valuation is all things that can be put into an actual cash value.
And it can be a little bit misleading for folks that say, well, my market value of my home is $150,000,
Yep.
so I only need $150,000 worth of insurance.
Right, which you can do. Okay, we can do that. Okay, but the thing is, we need to make sure that you understand that what you're getting for that coverage. Okay, so example. Well, I'm going to just continue on actual cash value a second. So another good actual cash value. We're seeing this a lot in our industry. The roof gets damaged, okay?
Hail damage.
Right. Now, a lot of our companies are not giving replacement cost value on those roofs after 15 years, okay? They take it away or might not give that coverage to it. But so an example, if you have a 20-year-old roof and you've had it for 10 years, basically the actual cash value of it is basically half because you got 10 years. So that's
You got
what
10 years of use out of your shingles, so you're not
Right.
going to
Right.
get full benefit.
If you have an actual cash value policy. Now, most people have a replacement cost value, which means that they'll get the whole roof replaced.
Okay.
Mainly is what happens there.
And we'll get into the replacement cost, but something that also we'll talk about during our next break here is replacement costs and the reconstruction costs, the revalue.
Right.
The main thing, and we've talked for weeks now, Tom, is we're putting the pieces together to make a very nice collage, a nice puzzle.
Right.
And you want to make sure if anything, God forbid, happened to your home, or if you're looking at selling your home or buying a home, you want to make sure that you have the right coverage so that if something did happen, you know that you're covered. And
Right.
that's the important part of this whole discussion.
That's the key right there.
We're going to take a quick break. When we come back, we'll talk more with Tom Sorensen, Americana Insurance, as you're listening to our Saturday morning program with Insights into Insurance. We'll be right back. Yeah, right after
You know when your line starts singing and you're positive you've hooked into a big one, but sometimes everything stops. Suddenly, it's a sad story about the one that got away. Crops can be like that too. You put in all the work, but there's always a chance nature might try and take it away. At Americana, we help farmers find the best crop insurance options to protect against loss from hail, excess moisture, drought, wind, and fire. So put Americana in your tackle box. Americana Insurance. We're the A-Team. AmericanaInsurance.com.
Welcome back. You're listening to Insights into Insurance with Tom Sorensen, Mike Whitus along with you. And Tom, we're talking about insurance values, and we've got a couple examples that you can give on the actual cash value of some maybe machinery or some other items.
Yeah, I just talked about the roof example of actual cash value. Well, now let's talk about farm machinery example. Okay, so if you have a combine that burns up, okay, farm machinery is basically insured at an actual cash value. So it'll take its hours, the type of combine,
How old it is,
and go out and try to find the value. So they aren't going to get replacement costs on that combine. They're going to get what is considered actual cash value.
Okay.
But now that sounds like actual cash value is worse than replacement cost value. But just a warning here is collectibles, okay? An example I'm just going to give you. So let's just say 1865, you got a 2-cent stamp. I mean, you got an 1865
Right.
2-cent stamp, okay? Replacement cost of that 2-cent stamps is what?
2 cents.
2 cents, right?
Wow.
Okay. Actual cash value worth could be 2,000, whatever that value of that stamp is. So when you're talking collectibles, that's a whole different thing. Make sure you talk to your agent about your collectibles and how that is taken care of. So
And that's another piece of the puzzle, because a lot
Right.
of people may have gold watches in their little safe in the room, or they may have some heirlooms that
Right.
they got from grandma or grandpa, and they maybe forgot about that when it was time to do some insurance needs.
Right.
Now we're giving you a heads up that needs to be taken care of, and let your insurance agent
Right.
know exactly what you have on the collectibles.
Exactly.
Now let's talk replacement costs.
Yes, replacement
We'll
cost.
get to Anthony's question because he wanted to know about, why didn't he explain that I had to take $250,000 of insurance?
Right. Yep. We're building up to your answer, Anthony. We're building it up. We're keeping you tuned in. Replacement cost or replacement value is the cost of replacing property without reduction for depreciation. It would be the value of replacing the item with new. Okay? Pretty plain and simple. Now, with his situation is I can tell you nowadays we use the word replacement cost coverage too much in our industry because it actually should be reconstruction cost value or coverage.
So
Okay.
if you had a fire or if the machinery burned up, then it's more of a recovery cost.
Right. I'm going to talk houses because that was Anthony's question
Yep.
here. So what his agent did was probably did a reconstruction cost value of his house. So reconstruction costs, think of it this way. Replacement cost would be from the foundation up. Okay, building from the foundation up. Reconstruction value is top-down construction versus the foundation up. So what would you think is less expensive? Well, obviously you think, well, top-down construction, what does he mean by that? Well, the foundation up is actually a lot less expensive. But the issue is we just had a house burn, let's say, okay? Well, all of a sudden you got debris removal, which costs about $20 a square foot. So you take a 2,000 square foot house, that's $40,000 in debris removal cost, okay? Site preparation, 5 to 10% of the cost of the building. Contractor's bid after a disaster. So let's say we had a tornado go through this town, okay? Do you think the contractors are going to bid it as they would if it was just a one house? No, because they can't. I mean,
The market's going to, you'll have construction people come in and they're going to jack their price. So the local construction company has to be a little competitive as well.
right, exactly. And so, and they can get it at that time. Plus, they're going to be really short-staffed probably. There's architect fees of 5%. Underground property is covered on a homeowner's. So when you get into your house burns and you're going to have to totally rebuild, so you got to first of all demolish, and then you got to get rid of all the stuff, okay? Then you got underground property that you're going to have building code compliance and things like that, so that to replace that can cost up to another 25% of additional cost on the rebuild, what we call ordinance of law coverage. And then there's other cost of permit costs and insurance costs, such as builder's risk coverage. So what you want to do is make sure that you have reconstruction coverage value instead of actually replacement value, which truthfully, most of our homeowners, that is where we're going with it now, because the cost of reconstruction is way more than cost of new construction.
And that's something, as you said, Tom, over the years that really has changed, because it's kind of woke my eyes up. Is I've always heard an agent say it's replacement cost,
Yep.
replacement cost. Now take a look at your policy, meet with your agent, give
Yep.
Tom Sorensen a call at Americana Insurance, because you should be looking at reconstruction, not
Yep.
replacement.
Well, I'm guilty, Mike, as an agent, of still using the word replacement cost coverage because that's what everybody is tuned into hearing, and it's just what do I want to say, muscle memory or brain memory. So
Right. Well, and that's where you're comparing insurance policy.
Right.
Maybe Agent A is using replacement costs, and you visit with Tom from Americana Insurance, and he's using reconstruction costs.
Right.
There is going to be a difference.
Absolutely, and we have we call it replacement cost estimators or reconstruction cost estimators. That's what we use as reconstruction, but there's ones out there that do replacement value. But so just check with your agent.
And of course, for Anthony's question, 150,000 market value, 151,000. 250,000, probably a reconstruction cost value is right in line.
Yep, you got it, Mike.
All right, and of course, if you have more questions, you can always call Americana Insurance, 377-2000.
Yep, or they could look on our website for americanainsurance.com, and then they can also email me questions for the show, or email me just if they're interested in talking about maybe reconstruction value. Is insights@americanainsurance.com.
All right, another fast Saturday morning, Tom. Thanks for stopping in. Enjoy your weekend. Go Tigers.
Go Tigers.
We'll see you next Saturday.
Take care, Mike.
That's Tom Sorensen from Americana Insurance and Mike Whitehouse wrapping things up for Saturday morning with insights into insurance.
When it comes to crop insurance, there is one thing Americana Insurance won't do. We won't come out to your place and shovel manure for you. But we will offer annual information seminars to keep you informed and annual insurance reviews to make sure you're covered. We'll provide crop insurance quotes that are easy to understand and hail, fire for crop, replant, and green snap insurance. But again, we won't shovel manure. On the other hand, you probably already met too many people who will. Americana Insurance. We're the A-Team. AmericanaInsurance.com. You've been listening to Insights into Insurance from Americana Insurance Group. All information provided is intended to be educational in nature. Before acting upon any information obtained during the Insights into Insurance radio show broadcast, consult an appropriately licensed professional.